Inflation versus central banks. The supercore is heating up, and that means Powell's testimony and jobs reports matters this week. But with so much volatility coming, who's in control right now? Well, the simple answer is obviously the bulls. The Q versus SPY combo, which is one of my favorites, continues to hold its channel from the October lows. But more important than this, there are opportunities everywhere around these markets right now. The Russell 2000 looks set to break out potentially with small caps that are non-profitable coming through. Apple continues to struggle through the lows, which is a bit of concern with bonds. And of course, there are big heat ups across some metals and oil. Oil with a huge breakout last week that we talked about, and gold with its highest weekly close on record. Could it be joining the crypto fun? Is it going to do well? Today, we'll discuss everything around the world in a special weekend edition of Stocks, Commodities, and Cryptos. Well, welcome back everyone to The Daily Show, and we've got a lot of stuff to cover here today because I'm excited to go through everything that is coming this week, and there is a lot. Of course, semiconductors did really well last week, and there was a heat up in Tesla. More on that later on in today's show, as Tesla broke through and held above the $200 range. Just a quick reminder as well, if you're wanting to get in on the action a little bit more, VIP free weekly newsletter, links in the description down below. And we do have a special sale for March as well running, which runs out in less than 24 hours. If you've ever been interested in what we do over at FX Evolution, then links in the description and check it out. So let's get started with something that I've seen going around the internet a little bit here, which is The Economist. And it says, how high can markets go? Obviously, whenever we see these types of massive hysteria or FOMO kinds of headings or fear, we tend to think of it as a contrarian indicator. Well, it turns out Jason went through and had a look at these, and he went and covered 235 covers from 1998 all the way to 2023. Now, it turns out the score was kind of a mixed bag in between. It's not a comprehensive study or anything like that, but it's pretty good. But what I thought was most interesting about this is when they went ballistic on the bull side, often the 1 to 2 month results were certainly questionable. Now, it makes sense that overall the next 12 months was up, although that's still a pretty bad stat of 60% if you know your market stats overall. But the first couple of months, that's where the kind of weakness started to come through. And as we've talked about before, sentiment has been shifting into the super bull category with all the bears getting wiped out in recent weeks. Now, that doesn't mean that the market's going to sell straight away. Obviously, price action will be the key. We're talking about bonds later on today and whether they're still showing signs of weakness and where cracking points could be. But this will be a big one because, of course, Powell has been referencing recently the supercore metric. And what have we seen in the Supercore metric? Well, I posted over on our X account the Supercore read, and it looks like it's starting to heat up again. So you would think, logically, that central banks around the world would be tightening liquidity, bringing that thing down. It turns out they're not, and we'll show you our central bank indicator later on. But basically across the boards, according to Goldman Sachs Financial Conditions Index, we are seeing relaxed conditions. Now, when we get relaxed conditions, that tends to lead into markets being very bullish. And of course, you might say, no data, Tom, look at these markets go. Yeah, well, if they do start to tighten up again, we'll be one of the first to report that because this can be a little bit difficult to find, this particular chart. So just remember to subscribe because this thing here also leads into crypto discussion as well. Because when we have financial loosening, we tend to see a lot more speculation. Now, we mentioned at the start of today's video that gold might be breaking out. And in recent weeks, CTAs, commodity trade advisors, they've been purchasing into gold again. You can see here, we've seen some upticks. Now, we've been on the general bullish side. Obviously, I love gold if we're getting rate cuts on the horizon. And it looks like last week, we hit those big supply zones in terms of interest rates and started to see a little bit of a sell-off. So is gold about to heat up? This is the biggest weekly close that we've seen in some time. We'll look at the chart later on and I'll give you my opinion on what I think gold could do because while it might be a little bit more boring than maybe Bitcoin, I do think the shiny metal is coming back in a big way over the next couple of years. Let's talk about exchange traded call options. This is obviously one of the biggest things here when it comes to retail traders and also when it comes to market sentiment being a little bit too bullish. Whenever we get spikes in the overall call options here or the overall amount of options that are open, we do tend to be needing to pay attention. You'll notice since 2022, these particular highs here have correlated very well with sells in the markets. So are things heating up a little bit? Sure they are, but they're not quite near the crescendo points of something like a 2021. So you need to be careful about just reading into this. Obviously, this is certainly a worrying signal, and it means that you need to be cautious in markets, but at the same time, it is not an instantaneous sell. We will continue to track it though throughout the next couple of weeks. Here's another one here from Matt Ceramanaro, I think his name is, and what he's doing is he's talking about bonds. Now, I haven't seen too much discussion about this, which I always like. Of course, we're talking about it now, so I'm sure many people will be discussing it. But basically, crediting or markets don't seem to be moving with the stock market itself. We're seeing stocks rallying up, and we're seeing bonds kind of floating to the downside, yield in general kind of weakening off. And of course, stock markets are just like, yeah, this is all great. Now, if you know anything about bonds, you often will trust bonds more than you will trust stocks when it comes to an overall signal of weakness or strength. And then what you're going to be using is some kind of price action based signal with the actual stocks when they start to form. Because what a bond weakness is telling you is that if you do see a sell with bond weakness, it's generally going to be a larger sell, more of a corrective turn to maybe something like the 20 moving average on the weekly or something like that. These types of moves are what you're going to be paying attention to. So are bonds weakening against the stock market? The simple answer is yes, right now they are, and we'll look at that later on. Now, I mentioned that all bears were gone. 21.3% of people were only bearish over the next 6 months, according to the sentiment surveys last week. And that's a pretty big read because, of course, a lot of confusion, 32.2. But when you consider that there's usually 31% bearishness in the markets, we've had a lot of weak bears recently. And when eventually somebody says, oh, it's profitable for us to turn this market down for whatever reason that might be, there's always some weird catalyst, then it'll get pretty serious because you can see here that there's going to be a lot of trapped money at that point. So let's talk about the market that everyone wants to discuss right now. And of course, that is the crypto market and Bitcoin in particular. Now, is it doing well? Absolutely. Do I think it's going to do even better? Yes. A lot of people have asked me, what are your opinions on it for this year? Well, my opinions over the next couple of years is, of course, that I do believe Bitcoin will well crack 100,000 US. And it could get up there to the 200,000, but you've got to be thinking about market capitalization size at some point. So what this is it's an alternative asset. And because there's an exchange traded fund, we know that huge funds and huge big traders are now going to buy into it, which is a big deal. But that's going to be a huge point for crypto. So exchange traded fund and the overall market capitalization size is going to be the biggest deal. Now, for now, where do we find ourselves? Well, the thing about crypto is it's moving faster than we've ever seen it move and definitely beating out my expectations overall into the halving cycle. Now, if you don't know about the halving cycle, it's coming up and we'll talk about that more on the show in the future. But I do want to just quickly remind people that generally speaking, when everyone jumps on board the train of the hype in crypto, while it can run a little bit more, it does have some stats with it. So here are the last 3 times that we saw crypto markets jump plus 18% or more over a few couple of days, 3 days in total. We usually saw a holding period, if not a weakness period. Now, if you like crypto, you're going to want to be watching this channel as well because we'll be talking quite a lot about financial conditions. Now, one thing about crypto is it does work a lot on speculation. So we're going to be looking for financial conditions to be loosened, to be easier, for debt creation to be easier, and all of those types of things are actually very, very good for crypto. As it turns out, though, they should be theoretically pretty good also for companies that are in the innovation space that are not necessarily making money. Now, remember those ones back in 2021? Well, are they starting to show signs of significant recovery? If this market keeps going up, I think that could be an area where we need to be watching. Let's talk NVIDIA for a second because, of course, it approached the $800 target price where we have a massive call wall last week. And we've been talking about since we saw the whole earnings that there might be some weakness on the horizon over the next couple of weeks. Now, that, of course, was not the case on Friday with a plus 4% move. So we'll see how NVIDIA ends up trading, but I still wouldn't have too much FOMO for it over at this price right now. If you're a hodler, or somebody that wants to hold it for a long-term investment, I think it's still an exceptionally good stock. Of course, it's not just my opinion. People like Stanley Druckenmiller, who I have a hell of a lot of respect for as an investor and trader, he's holding it while he dumped off Google and obviously dumped Amazon the other day. And it turns out he made a pretty good move on that Google trade. Let's now talk about whether this market is in a normalized bear or potentially bull market right now. Well, as it turns out, we're in generally what is the calm. So usually a VIX underneath 20, which it's been there for ages, is considered a bullish market. Obviously, the moves that we've been seeing, the volatility that we've been seeing, they're all with normal, calm financial conditions. There will be, of course, spikes throughout that. We think there could be one in March. Obviously, we've been talking about it, but we've seen no signs yet. This week may be the catalyst, though. Maybe the overall Fed comes in and scares the market with changes to their policy. We're going to hold it higher for longer. Who knows? We'll see what happens. Let's move over to another discussion, which obviously is the discussion of AI. A lot of people are being left out and saying, I've missed out on the AI rally. This sucks. I don't think you've missed out necessarily on the AI rally. There's a good chance that this will go on for the next decade, so as in 10 years, and there will be opportunities. What I want to show you on this chart again is not only that we could be just the beginning of a way through a late cycle bull kind of bubble run that tends to happen, but also that there will be significant pullbacks throughout it. So depending on what your real opinion is of the whole markets, I'm sure there will be some large pullbacks that do come, although it may not be as significant in something like an Nvidia. I think that stock has already shown in the past during other AI bubble runs that it's able to lose upwards of even 80% of the stock and still recover. So you'd be surprised how much Nvidia's run and dumped before in the past. So where is the opportunity right now? Well, could it be the Russell? We spoke about this many, many times last year, and obviously we've been talking about it again recently as the Russell's been heating up. And this is an area where we need to be thinking about the Russell for the rest of the year. Will it actually outperform the rest of the stock market in 2024? Remember, it is still behind. Now, what I think is going to happen here is if we continue to see FOMO in these markets, obviously leading off so many big thrusts. The Zweig breadth thrust of last year, the Wayne Whaley toy 2-month. Then we've also got Wayne's study here of a 25 and 0. We have a lot of strong bullish momentum indicators that are coming through the markets. And although it might not make sense to a lot of us in terms of when you're looking at the news and looking at the data that we're getting, that just seems to be the type of thing that's going through. So it makes sense that maybe the laggards will start to pick up now that we're at all-time highs and that, of course, we're breaking out. But you've got to be very careful here because as we've talked about several times before, there could be a sell just like that when you least expect it. So, of course, traders will in particular do well around these periods of time as long as you're managing risk. Let's talk about a 3-day Nasdaq pattern that Wayne's done some studies on here, and he's found that when he saw a very similar pattern to what he's been seeing over the last week, this is the 1-day, 5-day, 21-day, and 63-day overall return. And you can kind of see here some pretty strong, although more mixed results, but the overall result was very strong over the next 63 days. So again, just showing that if we do get major pullbacks, they're probably going to be bullish. Now, a lot of people have been talking about, why is this March sell, man? Why is it not coming? So, of course, a normal March sell or normal Feb-March sell tends to happen more in the February period. Then a March sell usually is an election year kind of sell. And you can see here that March, April, and May tend to be actually pretty strong months. April is an absolute best market month of the year traditionally. But of course, that does change in election years. Now, we haven't seen any real signs of weakness yet in this market. We are right here at this point. So obviously we're getting close to where you really should be starting to see a sell. Could the Federal Reserve be the catalyst this week? Well, of course, we'll talk about that throughout the show. This is what usually happens, which is a sell of Russell and Nasdaq more than the S&P. And we're still looking for CTAs to dump. Now, I don't have any new CTA data, but what I can show you is that they're certainly not dumping yet, although they have sold some tech. So you can see here, some tech was sold, and then they went, oopsies, we've got to buy a little bit more back in, it looks like. So they're still elevated. There's no new low. If there is a new low, of course, we'll be first to report on it and talk about it together if that occurs. Let's move over now to one of the markets that's been doing very well. And I guess this is just to show you that there is opportunity in these markets around the world. We've been very bullish on China now for over the last month, and it's been doing very well. Of course, that's been contrary to the news, contrary to what a lot of other people think about it. And that's because the price action has actually been showing that. Now, if you were to ask what's the price action doing in the US stock market, obviously it's bullish. What's the price action doing in the Chinese market right now? It's bullish for now. What's the price action doing in oil? It's bullish. It's almost like every single one of the charts you're looking at, other than maybe the US dollar, is looking quite good. So could there be an uptick in some laggards? Well, we've been talking about oil a little bit. Remember, energy is one of the most hated sectors right now, and it's going into a period where it tends to do a bit better. That huge move on Friday is good, and obviously the CTAs across the board have been purchasing oil recently, and you can see here crude and everything else has been doing pretty well. Now, we mentioned before NVIDIA and the options stock. Of course, 800 is a big level. You can see here a call wall. If NVIDIA is able to break through this through the Monday session into the Tuesday session, then wouldn't be surprised at all to see a fairly large move to an $850 strike. I still think NVIDIA is going to struggle around this point for a little bit, but who knows? It is semiconductors. It is the largest stock in the world in terms of overall volume right now. Let's now move to Tesla. So things heating up for Tesla. Well, there is a large trade that's gone through on the Friday session. So I thought I'd bring this up. We obviously saw what looked like dumping a while ago, and it led into weakness in Tesla. But this particular stock has really been behind the times. And it interests me from the perspective of it's really actually a partial AI play as well, but no one's seeing it as that. We'll talk about it with the actual charts soon. But let's go through some more volume trades. Treasuries starting to look a lot better. Obviously, yields falling through the Friday. We know this is a big accumulation zone for Treasuries buyers. We also know that there was a randomly huge trade on the Qs, and I mean huge trade. This was a monster that came out of nowhere through the last couple of sessions. So, of course, this could be someone taking some profit. I wouldn't blame them, but something I want to set you from alerts to anyway. And this week obviously marks still earnings season. So these are the earnings if you're interested in looking at those stocks. Nothing notable that's going to absolutely make the market go in a huge way, although there are some Chinese stocks in there. So I thought I'd do something a little bit different on the show and show you all of the different main catalysts of the week. You can kind of pause it here on each one if you're interested, but here's our Monday, here's our Tuesday, our Wednesday in terms of what's going on in the markets, Thursday, and Friday. Now, if you're interested in having this in the show some more, then let us know and I'll start to cut it out and put it in each and every week ahead. We also see this week's major US economic reports being a big deal. And as we know, the main ones here are going to be the jobs numbers on Friday, the non-farm payrolls, and obviously everything to do with Fed Jerome Powell. And this will be a very important week because Supercore, as we saw before, is heating up. Central bank liquidity is somehow injecting in. And we're not seeing anything to slow the markets down. You'd almost say that in election years, they're not allowed to let it fall, it seems. So let's now talk options markets because they were massive last week and retail and Wall Street are getting on board options in a huge way. We'll be adding some extra content into this daily show as well to cover everything to do with options moving forward. 51.36, 59% calls, and 30% retail participation meant that we know that everyone is FOMOing across the board, but at the same time, it can run for a little while. What I find most interesting with all of this is Tesla is still below its 90-day average volume, but it did close above $200. More on that later on in today's show. So a lot of big moves. Here they are. Pause it if you're interested on that particular screen. Let's now move over to the charts. First up, the lead indicators. So we know that financial conditions are softening, but we also know that it looks like bonds are starting to look a little bit weird. So we do have here an indicator that's starting to spike up, came down a bit on Friday, but if that makes a new high, we'll be the first to report it because that is going to be a fairly big deal. It's going to show weakness around the markets across the board. Meanwhile, we have central bank liquidity injecting back in a big way. Wow, this is the first time in a while it's been injecting back in. I have no idea why that's going back in, but we track a whole bunch of metrics. And I can say one thing about this is that it's almost now at a new high. And I don't know why they're putting it into a market that's already going bullish. But hey, there must be something probably behind the curtains we don't know yet. What about yields? Yields dropped. And of course, the US 2-year dropped off that 4.7. We know that dropping is great for treasuries. We know that dropping is great for gold. We know that dropping is potentially okay for unprofitable companies as well. So that's bringing in the Russell 2000 back into discussion, especially the unprofitable ones. And we need to talk yields. So we expect that bonds would be doing well when rate cuts happen. Now they are doing better. You can see here that high yield continues to coil. When this breaks out, it's going to be a big thing for markets, whether it goes to the upside or the downside. If high yields go down, that's not going to be good for markets. But our main bond indicator here, it was weak and then it strengthened right off the base. I would like to still point out this is in a overall holding pattern, although it had many days of weakness last week while the markets were going up. It's for sure that bonds are definitely not as strong as the market right now. So someone's sniffing out something, but we haven't seen a catalyst just yet. US dollar did end up weakening. You can see here on the weekly, it ended up closing as what we call a long leg doji, a high-low open close at the same level. And this is leading into a pretty good euro trade, which we discussed last week. Now, scale-wise, if you'd gotten into this one, you'd be pretty happy with yourself. Obviously, the overall break happened around here. Very nice, significant move, which of course is happening, and then it's pulled back. Now, if it had gotten under this white line here, I'd be a little bit more worried about it. But yeah, it looks like maybe the dollar is going to weaken and euro is possibly in a huge change of trend here. So it's a pretty big deal in the currency world. Now, generally speaking, you would expect oil to possibly be dropping in this environment. You've got yields down, you've got dollar down at this stage. But it did actually end up closing at a very nice closure. And this is a pretty big deal. Now, you might notice it's still in the wicks, being at 79, 74, not quite getting above 80 and closing. But this is a pretty significant level. I've been pretty bullish on the old oil train because I'm liking it to that 82.50, 84.50 range up here. And at this stage, all of this has to do with the supercore and the fact that realistically, the central banks around the world aren't really doing anything to fight the inflation anymore. Something is definitely weakening behind that we don't quite know yet, I would say, but it could be even more things at work. Another thing I like is that these two wicks were closed above. So for now, it looks like oil is strong. Obviously, $76 being the huge base of buyers here, and it could be on and ready to go. Another one that is ready to potentially go is USO versus the SPY. Now, we have here kind of a Wyckoff/diamond pattern, if you want to think of it that way. A lot of different methods to really tell you the same thing. But if we do end up getting a break above 0.15, it could be that we have outperformance on the energy markets in comparison to the SPY, which has been one of the biggest laggards for a while. What about gold? Well, this is a huge close for gold. And I've got to say, it makes sense for it to run if we're seeing Bitcoin moving this heavily. Now, you might say, well, Tom, I don't care about gold, man. Who cares if it moves 10, 20%? Look, gold has a ton of money behind it. We know that it's been absolutely terrible. And we can say unequivocally it's been absolutely terrible for years. And if you actually looked at something like gold versus the SPY or something like that, you'll really see how horrible it's been as a underperformer for a very, very long time. So there's no doubt that gold is a hideous, hideous investment vehicle during a lot of periods. But what you might notice is that during the last period of cycle, around this time here, which I'd argue we're kind of in that similar period, we saw gold outperform heavily. Now, I believe we are going into a multi-year for these types of things. So gold is already looking good from the TA perspective on the short time frames, but it actually might do quite well on the longer term time frames, as in the next couple of years. And there are valid reasons why, and we'll talk about the studies moving forward. But overall, it's a pretty decent break here for gold. We got above and a big weekly close, and it suggests that pullbacks in gold should be met by bull demand, as this is a significant breakout. And while it's not quite above that high, it's the first type of sign that we usually look for, and it's been consolidating for a while. Even a lot of people will have things like cups and handles that they've been talking about, which is this type of thing here, and this being the overall handle component, and they're looking for it to be moved. I would think that gold should at least move to $3,000 over the next 12 to 18 months. At least that's my opinion. We'll see whether it comes true. Someone's probably going to shellac me from that later. Let's talk Tesla now, because of course Tesla has been improving in a decent way here. It's been consolidating, and there's definitely a lot of transactional volume going through it. So what we've been seeing here is we've been seeing a huge amount of trade and a decent amount of consolidation. Now, 200 was closed above, which is a huge call wall on options. So there's a good chance that Tesla might be heating up. And there's an AI play here as well. Of course, there is an argument, and I'll just say my opinion on this. There is an argument that one of the most important things with AI, well, it's not even an argument, is data. And we know that, of course, whatever Tesla's doing, they're trying to make this robot that walks around and does those types of things. So you would imagine they're going to capture a lot of data with that. So I think data is the pretty much the most important thing of the next decade. And there could be a big data play here from Tesla. And although it might not even be to do with the cars, remember it does have an AI component in the future. And I do think that people are starting to sleep on the price, considering what we've seen coming out of AMD, Nvidia, and others. Let's talk Nvidia here. Very big call wall being breached through, which is the 822 level here. So obviously 800 being breached. Now this kind of marks 850 being possible for Nvidia. I know I've talked about potential weakness on a very strong stock, of course, from the data perspective. It still could be weak, still could be sideways, go 850, come back down, sit around for a while. I'm not really feeling too much FOMO here. If you're an investor, obviously, that's one thing. I wouldn't necessarily trade against it too much either unless you're using options. But we've, of course, talked about it quite a lot. And just remember, options, while it's always a great way, if you were trading options into the earnings because of the implied vol moves, you wouldn't have made as much as you would think, even though it rallied up. So just do remember that options do come at a high cost as well. Super Micro continues to flail around. We've already talked about this one quite a few times in terms of overall weakness that we see in this stock for about 3 to 6 months. And Apple, while it did break below 180 and it's testing from the bottom up, which is certainly a worrying sign, it kind of just got up to make you go, oh, is it really a break? We know where the biggest level is, though, because, of course, most traded zone, as I've had on the chart for a long time. If we take that low now, that's going to be that absolutely Apple is totally getting cooked. You can see here it ends up as a bullish hammer. I don't like this stock at these levels. If it does end up rebounding here and going through 185, though, it's an absolutely great trade. And we'll talk about that if it does happen to the long side. But for now, it's just kind of like looks weak, looks terrible. I'd go with weakness over strength, even though strength in the market generally. But yeah, Apple 179.66. Let's move over now to the Mag 7, new highs. Okay, that's pretty bullish across the board. And I thought in terms of our stocks in focus, we'd talk about ARK. Now, not a huge fan of necessarily the ARK fund, but what I do think is it's got a very similar base to all of those unprofitable tech companies, those companies that may benefit as well from some kind of AI. So you can see here, we do have a nice weekly kind of setup that's happened recently. We're still well below where we have been in the past. And there's a good chance that this stock could, of course, start to recover pretty heavily with the Russell 2000 breaking out. So if that happens, which is still kind of right on the zone, this is all going to be very important. So RK, one to watch, certainly for the week ahead. HSI being, of course, one of the Chinese catalysts, very, very nice. Nice bullish hammer. Obviously looking good on the charts for now. We'll see whether it can continue to improve, along with mostly the tech stocks. The Aussie market is on fire right now, helped by oil, helped by minerals and metals improving across the board. Australia's got a huge amount of those. Big breakout there. You know, Australia could be going into actually a bit of a better performance over the next couple of years as well. If anyone knows this market, it's been a while, but this is certainly a breakout and kind of signals that there could be more on the horizon. Could we get an 8K? I mean, 7,800 was the first target. Of course, it's getting close to that now, so an 8K could be on the horizon for it. US 2000, yeah, we're still technically at the res. Although the weekly close is very good and it points towards further strength for the Russell, we're still kind of in the supply. So we'll see whether it can do it. 2090 was one of my targets a while ago. So it's very, very close to that. And this could still be a turning point for the downside for it. So the Russell's still looking better. A lot of small cap stocks potentially breaking out. I'd go to the single stocks and look for those instead. US 500 and Qs, what's going on there? Well, it's more of the same. 5136 broke through 5100. That opens up, of course, 5150 and 5200. Most people are going to call 5200. Fair enough. It's the next major options wall. It's also the next major 100. You're in uncharted territory here, so we just kind of take it day by day. And as long as you're making a series of higher highs and higher lows, which we are for now, which of course is these types of things here, then we're good. And as long as you're above the 20-day moving average, you're still in a swing up. So realistically, at this point, it's still swinging up. We're still going through the highs, and I don't see a sign to weaken on it yet. Now, if you had weakened around here at the 5,000 level, remember you should have only done it with options, and you should have given yourself some good time. Ideally, that's what we're looking for. And I've said that many, many times. It's all about risk management in this game. So I wouldn't have blamed anyone to have a go at this at 5K just out of a prediction. But as we often say, patience often is better. React and don't predict. And in this case, we just didn't get that lower low, which was going to signal further weakness. Let's move over to Bitcoin. So things are looking good here in terms of maybe hitting a 65,000. And we've talked about the overall stats generally being weak for the market after it does that 18% over the next coming weeks. I do think it could blow into 65, which is the previous high close over here. A very important level for it. And I still kind of favor I think, the FBTC combo. So that is that Ethereum should be able to probably ratio out Bitcoin if we do move up to the 65. Ethereum's already done well. It's not done incredibly well, as we talked about, but it's around that 3,500. If it keeps breaking through here, the next stops for it is probably something like 4,000. And I think at that point, it'd be ratioing out Bitcoin. Good luck out there, though. The trends are very strong. And of course, things are on fire. Just a reminder, sign up for our free weekly newsletter if you want to find out more about the markets. It's a big show today, but we've covered so much data and so many things. And if you're interested in finding out more about what we do over in FX Evolution and our trading courses, you can check it out. Links in the description down below. We've got a sale on right now to find out more about how we day trade, how we swing, and obviously how we do the advanced options and data stuff. Of course, it's all about learning and always improving. We've been at this for quite some time. Thanks so much, everyone. Have a great day and good luck in the markets for the week ahead.